The U.S. stock market has recently taken investors for a wild ride. You may have seen headlines recently such as U.S. stocks experience their worst two-day decline in history, or you may see a headline such as, tariffs are spiking a lot of volatility. Now, while both of these headlines are true, they can distort the fact that given a long enough time horizon and investment in the markets, the investment trend is upward, which we will see in the coming slides. We're going to start with looking at the past week for reference as to what these headlines are showing. We're going to follow up with a similar time in history, which is March of 2020 in the heat of COVID. And then we're going to conclude with a big picture of the U.S. stock market from over 100 years ago to present. Let's get into it. We will start with the first chart, which is from a Morningstar database. This is public information that anybody can access. And we're really going to look at the last week here, which is what the previous two headlines really tried to bring to light. We're going to use the investment SPY, which is a proxy for the US stock index, which is the S&P 500. Here we can see over the last week, the index was down double-digit returns of 10%, and we don't see here, but from the peak, which was in February, it was down almost 18%. Being down 10% over a week period is very far from ideal. We do not know what the future holds, but we can look at historical times where we had large down markets and see what happened afterwards. Now, our next chart here is the COVID crash of early 2020. We can see here, if we were to take that crash in the short term and block it off and say we're just going to look at the first 3 months of the year, from February to end of March, the S&P index was down over 30%, which is a very big drop. However, if we now expand and we show the rest of that year, that previous high was actually surpassed by a future high in the fall of the same year, and we were completely out of the hole that we were in that roughly 30-day or so period. Your frame of reference is actually very important to this, because if we look at it on a very short scale, it looks terrible, but given enough time, this particular market did recover. And that is important that we don't look at just a week at a time, but we look at longer periods, minimum years at a time. Now, this third chart is by Morningstar, and it goes back to 1870, and it brings us up to 2025 in the present, and it shows us the growth of $1 invested in the US stock market in 1870. Now, we can see here there's a bunch of different titles. These are issues that caused the market to have downturns. And when we look at it on a grand scale, the downturns aren't as big as they look when we look at a very small scale. When we look at this, we can see, many reasons why maybe you think you shouldn't invest or the market is crashing, but every time throughout history, those previous highs were surpassed by future highs in the market over time. And we can even look at, on the very right, the COVID-19 pandemic. When we really scan out and minimize that picture, look how it looks over the long term, but that same event appears very different when we only look at it for a month or a couple months at a time. Lincoln Financial Group recently put up some research showing us the frequency of particular drawdowns in the stock market for any given year. And we can see here that almost every year the stock market pulls back 5%. Roughly every other year or so, the stock market pulls down 10%. Roughly in a third of years, the stock market pulls back 15%. And almost 1 in every 5 years, it pulls back 20%. So as of this video, we've pulled back about 18% from our peak. And we can see here that that does tend to occur roughly every 5 years or so. So it is not that far out of the ordinary to occur. In conclusion, the longer you have to invest, the easier it is to endure these short-term market fluctuations. They will essentially appear as a blip on the radar if you have enough time in front of you, what we call in the investment industry a time horizon. If you do have an upcoming short-term need for your money, it may be beneficial to not invest that portion of your money within stocks. The market will go up and it will go down over time, but like I said earlier, given enough time, the trend is slowly upwards. Thank you for listening, and we look forward to seeing you in our next video.